Another tutorial on Camarilla Pivot Points, one of my favorite tools, as you know, in trading Forex and any instrument on the financial markets. And I will show you how I use weekly Camarilla Pivot Points. I use both weekly and monthly Camarilla Pivot Points together, but here you see the weekly Camarilla Pivot Points. And the charts, those are not time charts that you use it to look always. I typically don't use time charts. I use tick charts for my trading decisions, along with Camarilla Pivot Points, moving averages, as I saw in my previous videos. So what you see here is 2,500 tick chart, 2,500 contracts per candle. So we don't have time involvement here whatsoever. Candle builds up when there are 2,500 contracts in one candle, and you can change the size of the candle. You can have 5,000 contracts in candle ticks transactions, or you can change it to 10,000 transactions per candle, whatever you like. There is more accuracy in tick charts. I highly recommend you to use tick charts. It will revolutionize your trading. So let's start here with August from last year, how price behaves along the Camarilla Pivot Points. So we have here the opening of the months, and those are I call it opening range Camarilla levels, L1 and H1, or S1 and R1, whatever you call them. Typically they call them low 1 and high 1, H1, L1. And this is simply the close of the previous week. And the pink lines are reversal levels. That's where price typically reverses, or target levels. I call them also target levels. It's very safe to target those at the start of the week. That's what I usually do. Most of my trades, I base it on targeting these pink levels at the start of the week or at the start of the month. I find the best setups for that, tracking Camarilla Pivot Points for several instruments. So the week started, you see price immediately closes above a higher 1, H1 or R1, the opening range, and it's already an indication that most likely it will make it to the target level 3H3. So if I would see this, I would most likely at the start of the week close trading above H1. I would definitely target this target level, call it H3 or R3. And you see price made it exactly to the pip. It's not a big trade, it would be like 25 pips, and you could put the stop below the close, previous week's close. Sorry, there are some fireworks ongoing here and it's generating some noise. So then again, price still stayed in an opening range, makes another shot to H3. Yeah, you could use a trend line here to see that it's breakout. Those nice candles that built up, you see they are fine shape, built one after another. I call them momentum candles. And tick charts, they give you indication there's going to be move or continuation of the move, so it's pretty obvious it's going again to the H3. And instead of seeing reversal here, we see a high in price is making to the roof. The blue line is the roof. I call it the roof, or the ceiling. Depends, roof, the ceiling, or the floor if it's in the bottom. The floor and the ceiling, I mark them blue. It's just my favorite colors. That's how I use Camarilla Pivot Points. And you see very often it's a breakout level. Roof or the floor are breakout levels. That's typically price breaks through this, it makes to the black level H5 or L5. But here it didn't quite make it, because weekly Camarilla are not as accurate as monthly Camarilla. Monthly are more accurate, but still they are very good for trading. So sometimes price reverses at the floor or the ceiling. but here it's broke up, and you see this would be indication to target the black level H5, and price didn't make it there, so probably a losing trade. Yeah, but you could put a stop here below the lower low, so lower high, and you see, but price reversed it again and came back to the weekly close. So the new week started, and this would be probably a losing trade because price. But here we saw many black candles in between bearish candles, and we saw those rejection weeks. So I would be careful here. But anyway, it makes it below the L1, and you see it's pretty obvious it's going to L3, and that's what it did. It reversed it at L3, kind of reversed it, but didn't make it quite to the opening range. But usually it makes back to the opening range. Yeah, it made it the next week. It's good to have for 2 weeks Camarilla, or for 2 months, because you should look in the future using the previous week. Like here you see it made it reversed it at L3 and made it back to the opening range next week. So same here, week started, you see price makes it to H3, then the new week again makes it to H3. Very safe trade would be here also. Then next week, see price closes below the opening range, makes it to L3, very safe trade. Usually I just put my target take profit just below, just slightly above or below this pink line. My profit would be somewhere here, but typically price makes somewhere to the middle, but not always. Sometimes it just touches, just break through, but most of times it makes to the middle here between the floor or the ceiling and H3. Here we didn't see the reversal. As you see, price didn't even manage to close back above L3 to, if it would, probably it would go back to the opening range, but it broke instead below the floor, and I would target here the black level, the target level, breakout level. Yeah, and it made it there. Typically when price gets to the breakout level through the floor or the ceiling, it reverses there and it travels back to the floor. Like here you see, it's very nice structure. Here you can see the retest of double bottom, so it was quite nice, would be quite nice trade back to the floor or the ceiling. That's very common behavior. Price returns back to the floor or the ceiling once it hits reverses at the target level, the black level. So then next month, yeah, it was a fake out here, closed it above at the start, but then it closed below. You see here is a rejection candle, and it made it to the reversal level here to L3. Yeah, this is and then it didn't reverse, it broke through the floor, and it didn't make it to the, it reversed it at the floor, it didn't make it to the target level. But you can always use trend lines, like you can see here that it's reversing. Here you can see the momentum candles, big candles in tick charts, and it's going back to the opening ranges. You see it went all the way up to the opening range, as it usually does, either from the floor or from the reversal level, pink level. Now the next week it started again, opening range, it went to the reversal level. It made double bottom at the reversal level, retest of the double bottom, and we target the opening range. You can either target the L1 or the close. It's safer to target the L1 or slightly above L1, because it didn't make it to the close, you would miss the take profit. But it started to make higher highs, and when it made the higher high here above the opening range, it's obvious that it's going to the next level, to the other side, and it would be another trade here of 50 pips. And then it reversed it at the reversal level, at the pink level, and went back to the opening range into the close exactly. And at the close we got a bearish candle reversal. It was a sign that it's going again where? It's going again to the other side, to the pink on the other side, reversal level. And there we didn't see a reversal. Price kept making lower lows, and it made it all the way to the floor, the blue level. The floor, at the floor it stopped, as you see, and we saw a reversal at the floor. So you can go through those. You can use also time charts, but it's better, you see better structure on tick charts, and you can use it with MT4. You can buy tick charts at ovo.cz. There is a resource for offline charts like Renko, median Renko, point and figure, and tick charts. You can buy there for $50 lifetime. And it's really, as I told, revolutionized your trading, because you see structure very well, what you don't see in time charts. So now the new month started. Yeah, we had to figure out. Yeah, I would probably short here, but it would be probably lose trade. You have to be ready to have losing trades in between. I do have them, and you have to be able to accommodate them. Like most of my trades are winners, but I have here and there loser too. And you have to be able to accommodate them, not to over leverage. And if you are trading with a prop firm, don't use more than 1% risk, very max 1%. I usually use 0.5 on trading challenges. Yeah, it's the only way to succeed. If you don't have funding, is go to FTMO or TFT and trade with them, because if you don't have capital, there's no way to make money in Forex. It's only if you go with the prop firms. That's my very strong recommendation for you to start with prop firms. Well, trendy challenges, they do cost money, but they always have offers. TFT and FTMO, Black Friday, New Year, you can get minus 25% off on the challenge, and I would recommend to go with 100,000 at least, because it doesn't make sense to trade 10,000, 50,000 even. We would go very max amounts on trading challenge, like 100,000, 200,000, so that you would be able to trade with a smaller risk, like 1%, 0.5 after you pass the challenges. But it might take some time, but it's absolutely worth it. Don't waste your time by trading $100 to $200 small accounts. It doesn't lead anywhere. Well, it's good trading, but it won't take you anywhere eventually. Well, maybe you can, if you're lucky, you can flip accounts, but it's too much risk, and it's your emotions sooner or later will be very hurt very badly. But yeah, it's a good way to trade, to start, to learn trading. If you trade small accounts for maybe a year or two before you go back for trading challenges. But eventually, I highly recommend you to start trading with FTMO or TFT for challenges. So next month, figure out. But then here we see higher highs. Price makes it with momentum candles. You see momentum candles. It's very good indication to get into the trade. You see they built up one after another, and price didn't reverse, but there was this dodgy here, like hesitation candle, which then continued all the way through the ceiling. The blue line, it reverses as a ceiling. Remember, price often reverses at the ceiling, like it happened here. It's not often that it's kind of risky to target the black line, the target level from the ceiling, because often it is a reversal level, at least on weekly Camarilla Pivot Points. But it's more safe to target black level on monthly. So there is a difference between monthly and weekly Camarilla Pivots, but use them in conjunction. That will give you an idea where the price is going altogether. So here its price, you see, it didn't quite make it below L1. So, and here it's broke. It's indication to go long with this candle. You target slightly above. You target 28 pips here. You can even put stop below the lower low here, lower high, lower high. Yeah, always get confused with those. Yeah, but so you target slightly above, and it's made precisely. Then it's reversed at the breakout level. It didn't really trade further. It reversed it back to the opening range. Don't be 100% sure, you know, whether it will get there or there, but use your brain to see the things like the structure, and perhaps you can put some moving averages. You know, you can use 16. I recommend 16 moving average. You may of the highs and the 16 moving average of the lows. Will create some channel, or whatever you feel comfortable with works for you better, because you know every trader, some things work better for every trader what you have practiced with training. But so here you see prices, it's a kind of fake out, but here it was a retest, you know, like a nice retest and rejection, and price did make it to L3, you see, but slightly below. Yeah, it would be a winning trade. Yeah. Then it sometimes price makes many times, like a few times to the, it does this thing like going to L3 or R3 above or below quite a few times. Like he went here a second time, and then the next month, next week, it did kind of replicate the same thing again from the old week. Anyway, the new week started here. Yeah, it was a fake out here, but here it started trading decisively above the opening range, but it was very small Camarilla pivot distance here. So this month was fake, you know, it didn't make to the either side, you know. This week you see it didn't make. Next week, yeah, it make it through. Yeah, it worked it out next week. You see, you work it out 26 pips straight. Then it reversed it at the ceiling and went back to the opening range. Very common. Here it broke through the floor, and it eventually made to the black level at the beginning of next week. You see, you use two of them in conjunctions, and it will give you the previous week. You see, there was a breakout, but price didn't make to the black level, the target level. But it's a very big indication it might do so. Then at the start of the next week, they complete the process. And indeed, we had here a breakout below the opening range next week, and it makes it to the pip, to the black level you see here. And it's also at the same time the reversal level, and price didn't quite reverse because it was going along the trend line. You wouldn't see this on time chart, those fine structures. It's only on tick charts that you can see them, and that's why I recommend you to just forget about time charts, switch to tick charts. They're much more accurate, and it will be a big relief for you, trading relief, if you switch to tick charts. But you have tick charts on CTrader. Well, but the maximum resolution there is 1000 ticks, which is like trading 5 or 15 minutes chart. But you need to go bigger resolution tick charts and start trading like 5000 tick charts, which are same like 1 hour chart. You see, I usually trade 5000 tick chart, but to get those, it's only from ovo.cz, the resource where you can buy them. Okay, this week, the last week now in January 2024, yeah, price was started trading below the opening range. It was pretty obvious. The structure, you see, retest of structure. Here it was a small retest of structure. You see just box structure, another box structure below the other structure. So it's always sort of testing each other. You can just go and analyze those structures. It's very fine structure in tick charts. And well, it was obvious that it's going down, and it would be 23 pips straight. But it often happens in the night. You often miss it. You know, but better to wake up at 7 a.m. European time in the morning when the London opened, so that you could do the trades. And here we broke through the floor, weekly floor, and instead of reversing, you see this resistance here. Price went below the structure and reached the floor, 39 pips. And at the floor it reversed where it does go back. I mean the target level, black level. At the black level, reversal level, it went back to the floor. Exactly, you see it here. The pink line is the reversal level. Here it's usually reverses back to the open range. Watch the structure at this level, but there was no reversal structure here, so it went below the floor, which can be also a reversal level, remember, but it didn't quite signs of reversals because it was here against the resistance, you see, but instead it went lower. It broke this box structure. It was an indication to go short to the black level, exactly 39 pips. And here that's for sure it does. Usually I would never trade below this black level, weekly level or monthly level. It's usually price never trades there, and here it always reverses back to, like most of times, back to the floor, back to the blue line, and then it made another shot to the breakout level from the blue line, and then again returned back to the floor. It repeated the return to the floor twice. This was NFP news, this big move for down and back. I did trade short, euro short. I was shorting from here actually. I was shorting from this structure, but I use a different setup from tick charts, high time frame tick charts. Sometimes I look up at 20,000 tick charts and 50,000 tick charts. It gives me an idea what is going on, and I can place trades using higher time frame, well, higher resolution tick charts. Anyway, what will happen here next? We will see on Monday when the session opens. We will have new Camarilla levels for the next next week, and then we will see how price behaves at the opening range, of weekly opening range, and monthly. Well, monthly is already there, but still a long time to the February, 1st of February. But we will watch how price behaves next week at the start of the week, because the opening range will be here, and we will see how it behaves, and accordingly we will act accordingly to that at the start of the week to place our trades targeting the pink levels below or above. So I wish you a happy new year and success in your tradings. Hope those tips help, and I highly recommend you to take a look at tick charts, which will greatly improve your trading and make you, I'm pretty sure if you use them diligently, they will make you a successful trader. Be well and God bless you.